Thanks for listening to the ArtTactic Podcast. I'm your host, Adam Green. Bank of America and ArtTactic recently produced the first U.S. art market report. It combines ArtTactic's auction analytics alongside Bank of America's proprietary art spending data. You can download this report for free right now by visiting ml.com/us-art-market-report.html. In this week's episode of the podcast, we're joined by Drew Watson, Managing Director, Head of Art Services at Bank of America. Drew chats with us about some of the key findings from the report and shares his perspective on some of the latest trends in the art market. We hope you enjoy the conversation. Thanks so much for listening. Drew, thanks so much for joining us.
Hey, thanks so much, Adam. Pleasure to be with you today.
Absolutely. Well, I'm excited to dive in and discuss some of the key findings from this new report. But before we even do so, I think a great starting point would be if you could walk us through the methodology behind this report. It's the first U.S. art market report produced by Bank of America and ArtTactic, and it combines aspects of ArtTactic's auction data alongside some data that Bank of America possesses. How exactly were those two data sets integrated to be able to generate this report?
Sure, happy to, Adam. So I'll just maybe to provide a little bit of context, I'll share very briefly why we decided to do the report, and then kind of drill down into the methodology. Because you're right, it's a fairly distinct approach, and I think one of the things that differentiates it from some of the other reports that are out there. Look, I mean, for years, the market has gotten used to this cadence of various reports coming out. A lot of them focus on the global art market. It's never really one that focused specifically on the U.S. art market. And, why focus in on the U.S. art market rather than others? From a market perspective, of course, it's the largest market for art in the world in terms of sales. But then also in terms of the strategic focus of our business at, no coincidence, Bank of America, especially within our wealth management unit, whether that is the private bank or Merrill, both businesses across which my team and I work, there was never really anything that drilled down to the specific trends and kind of drivers behind what we see going on in the U.S. art market. In other words, where the market the most immediately impacts our clients, and the market that we look to for, the very largely the prevailing narrative over the global art market. So we thought, hey, this is a great opportunity. This is a bit of a gap in the market intelligence that's out there. So let's create this as an opportunity for not only for us to demonstrate some of our thinking, but then also provide some insights to clients who we serve that may find it helpful as they navigate the market on their own. So that's a little bit why we decided to do it. In terms of the methodology, in other words, how we went about doing it, it was really important to us to go about this in a credible way, and so we wanted to work with an external partner who really had specific expertise in data analysis of the art market, and ArtTactic has been an incredible partner in that regard. We've worked with them over the years on more of an ad hoc basis, but really thought this could be a good opportunity to forge a partnership. And so how we go about doing our analysis in the report, the methodology, is that we really focus on, admittedly, only one segment of the art market, which is, of course, the public market, right? The auction market. This report does not include data like some of the other reports do, and it's really fascinating about the private market. That data, as many of us know, that data set is incomplete because it often relies on self-reporting or kind of detective work, which Adam, I know, you're very familiar with as an advisor, about, sale pricing and sales and trends and so on and so forth. So we said, look, let's take the public market as a proxy for the overall market. That's where we have the most complete set of data. Let's focus in on the main collecting categories that are driving that market, specifically old masters, impressionist, modern, post-war, contemporary, and let's really focus in on, of course, New York as the primary sales site, and so that's what that was really the approach with ArtTactic, focusing on the hammer totals, excluding buyer's premium. And then for the Bank of America spend data, which is a separate data set, what we did was we worked with a data scientist at Bank of America, and we're able to analyze transactions coming in and going into and going out of the bank over a certain period of time with all art-related counterparties. So think about auction houses, but then we also looked at data around, other art world businesses like art logistics firms and, other providers to really understand, to get some sort of picture, some sort of trend analysis of what was going on more broadly in the ecosystem. So we then decided to focus in on transactions with auction houses, galleries, online marketplaces, and we focused in again on transactions ranging from $1,000 to 10 million plus. And that, of course, why is that significant? I mean, Bank of America, I think, touches over 50% of households in the United States. So it's an enormous sample of data, and one, again, that we could perhaps use as a proxy to give us meaningful insights about trends that are shaping the U.S. art market.
Now, there were a lot of really fascinating findings that came out of the report, one of which is that U.S. auction sales actually rose just over 23% last year. That was largely driven by a really strong second half. Now, that seems at odds with this broader narrative that's been surrounding the art market the last few years, that it's become weaker, it's been softening, but both of these facts are actually true. How is that the case exactly?
It's a really good question. So a couple of things. I mean, one thing that I would point out is that the statistic that you cited is correct. Year totals are up, over 23% from 2024. But even at that level, that is much improved year on year. And again, this is focusing on the U.S. The overall sale totals are still below where they were in 2021 and 2023. So in other words, the bar was set admittedly low for that it then to kind of exceed by 23%. But be that as it may, I think contextualizing that particular data point is important. But then also, secondly, what is driving that data point is also interesting. I mean, you and I and your listeners also know that the second half of the year last year, again, in terms of the auction market, which is the data set, as we previously discussed, is focusing on, was greatly helped by several single owner collections and estates that came to market, including the Leonard Lauder collection, the Weiss collection at Christie's, and so on and so forth. The conventional wisdom tells us, and then the auction houses frequently tell us, that these single owner collections and estates are really the outsized events in the art market that move the needle and that really drive the sale totals. So if you're looking at years or even sale sites within a certain year, whether it's New York or London, without a lot of these single owner collections or estates, the totals really vary drastically. So I think that's one major driver behind the strength that we saw in the market year on year, 2024 to 2025.
Got it. So would you say that the majority of that uptick is a result of major estates coming to auction or really high value works coming to auction rather than a broader correction in the art market?
It's one of the drivers. It's not the only one. So in addition to the single owner sales, um, even though we've seen a bit of a pullback in contemporary and emerging artists, when we were talking a bit about this before, kind of getting down to business today, where we are seeing areas of strength, and this is outside or perhaps overlapping with some of these single owner collections. Um, I'm thinking of the surrealism sale that was at Sotheby's this past November, where you had the Frida Kahlo that performed really well, for example, and that was from a collection. But we're seeing a lot of strength in particular segments of the market, even if contemporary is not performing well. So, for example, we've really seen what some people have referred to as a flight to quality, given the times of uncertainty that we've been living through. We've seen a resurgence in some of the more historical collecting categories like Impressionist, modern, even a bit. There have been some interesting old master sales as well. And then also in parallel to that, the strength that we've seen in women artists, which I know you were curious about as well, really coming out in some of the analysis that we did as one of the kind of more positive trends that is driving the market. And some of those women artists are 20th century, some are 21st century, and then some are better known than others. So I think there's a real kind of rediscovery happening there, which is an extension of this uncovering or kind of giving artists who had proximity to the art historical canon, but perhaps are only now starting to get their due. This longer collecting trend that we've seen in that space. So some areas of strength in different segments of the market, even independent of some of these major collections and estates.
Yeah, well, I definitely want to ask you more about the strong performance of women artists. But before we do that, another striking finding from the report is that New York accounted for almost 70% of global auction sales by value last year, which was the highest level in over a decade. We think about the art market as a global marketplace, but why do you think New York had so much art selling through it compared to maybe other hubs like London, Hong Kong, or Paris this last year?
Yeah, it's a really good question. I mean, it used to be the conversation, I feel like, used to be there was the battle between kind of New York and London. And then over time, it's really shifted to be undoubtedly New York as this kind of, as you said, consolidated global hub of the art market. And why is that? I think it has to, at the end of the day, it has to do with sellers and buyers. A lot of these major single owner collections and estates that we've seen that we were talking about a moment ago are from American collectors, and when they come to market, they're offered in New York, perhaps because they reflect an American collecting style or taste, because the property is located in the U.S. and it's just logistically and financially more efficient to offer it in the U.S. And then, I think on the flip side, buyers, I mean, just that there's such an active buyer community in the U.S. and still a lot of wealth creation happening. And so it's just an environment, I think, that creates the best circumstances of all the feasible options for collectors to capitalize, on that particular moment of offering their collection publicly. It's not to say that we won't see great collections coming up in other sales sites. London, for example, in the mid-season sales performed very well earlier this month. But New York, has really firmly established itself as the premier sell site for for art at auction.
Yeah, those debates about geography in the art market, they almost feel nostalgic. I feel like we haven't had them in a few years. There used to be debates about will New York retain its number one spot? Is Hong Kong going to surpass London? You had all these little micro debates about auction data and geographies, and it really feels like New York has just been so dominant the last few years. And in terms of excitement levels, I don't think anything compares or comes close really to the unveiling of the May, November New York auctions. There's so much great art and material in those sales. Everyone gets excited to see what's coming up for auction and those venues.
Yeah, but I will say about some of these other sales sites. I mean, we certainly can't discredit them. Again, London really displayed strong performance in their auctions earlier this month, partially perhaps driven by this flight to quality that we were looking at. Buyers being more discerning, more cautious, wanting to buy artists that are very well known with strong institutional representation. More historical. Of course, London has long been is traditionally the premier sales site for more quote unquote historical material. So I think, given the current market taste, maybe this will be a period of buoyancy for London. And then also Paris, for the past handful of years, has really been on the rise. It is a much smaller market, admittedly, but growing at a quicker rate because it's perhaps less mature. But they're definitely interesting developments happening in each one, but certainly, as you point out, the overall volume and value is heavily consolidated in New York these days.
And so perhaps the most exciting and interesting revelation from this report is the strong performance of women artists. If you haven't been paying attention, the report reveals that over the past decade, sales for women artists have not only grown significantly, but their resale returns have actually outperformed male artists. What an interesting fact. What do you think is driving this trend?
Yeah, it's a really interesting question. I mean, I think that this. I mean, partially driven by scholarship and also museums, the ongoing effort that has been unfolding over a number of years to fill critical gaps in museum collections, to make the collections more provide a more inclusive art historical narrative and tell stories that need to be told and that are incredibly interesting, but yet have not really had the platform in the past to be able to really be heard. So there is that ongoing effort, and I that does drive the market over time because museums are looking to make acquisitions. Major collectors sit on those collecting acquisition committees. They get a sense of what museums are looking for, and then that kind of shapes their overall taste and maybe collecting strategy. I also think another driver is if for collectors who are a little bit more opportunistic, and by that I mean those who are maybe focused more on the financial component of collecting in addition to more of the curatorial component. Women artists, especially 20th century women artists, have proven to be more of a value buy, if you will, than some of the artists with more mature markets. In other words, these are they're established names. Again, they have proximity to the art historical canon, and which is being revised to be more inclusive of the work and the ideas that they produced. And so, I think when collectors are looking for something that's new, in terms of how they're building out their collection, we're in a time where I think people are very cautious about buying artists with unproven track records. And they're perhaps looking to more historical artists like early, post-war women artists, for example, or women artists from the 1970s. and thinking, okay, well, these are kind of less established markets, but artists who are nevertheless very art historically important. So you kind of get that opportunity to get in at a more accessible level, and then as you've seen the data, perhaps see that investment increase in value over time.
And so before we let you go, Drew, I want to ask you to look out into the future for the rest of 2026. I can't believe we're already almost a quarter of the way through, but the report does so as well. And it suggests that stronger economic conditions, continued wealth creation, other factors may create tailwinds for the art market. What are some of the key indicators that you'll be watching over the next year? And what are some of the conversations like that you're having with your clients as you think about where the art market may be headed?
Some of the key things that we track, and like many other businesses, but the art market has kind of an interesting relationship with these indicators, or of course, broader financial markets, interest rates, financial markets. There's a lot that's been said about the correlation between art and traditional equity assets like stocks, for example. Art is often looked at as kind of a hedge because of its low correlation profile with equities. And that is certainly true to an extent, although there is a relationship between the equities markets and the art market, in the sense that when you think about the what we would refer to as the wealth effect. So the wealth effect essentially is an economic kind of phenomenon that tells us that when markets are performing well, and even if gains have not been realized, consumers will feel like they have more money at their disposal, and that often encourages discretionary buying on discretionary, making discretionary purchases like art, for example. So the wealth effect is a powerful thing. We always talk about how the art market is very sentiment driven. We're always talking about confidence in the market. And so this can be discounted. Be that as it may, the stronger relationship that we monitor with the art market is that between interest rates and the art market. There is, and you may be familiar with this, or some of your listeners, but there is really a reverse correlation between interest rates and the art market, because interest rates represent the opportunity cost of locking up capital in a non-income generating asset like art. So when rates are low, that tends to drive more capital into assets like art. And then conversely, when rates are high, that tends to drive capital away from art, because you can get a virtually, a low risk or virtually risk-free return in other types of assets. So, the indicators that we will be monitoring, to your question, are in addition to very high level geopolitical factors that will impact sentiment, along with stock market performances. Most importantly, interest rates. If we continue to see rate cuts, that's usually a leading indicator of a what will become a more bullish art market. And then conversely, if there are rate hikes, it is typically a more bearish indicator. So these are just some of the things that we continue to monitor, again, on a macro level. And we've now seen them kind of overfold over a variety of cycles, even over the past 5 years, since the period of very low interest rates coming out of COVID, the ensuing performance in the art market, and then somewhat overheating, and that leading to speculation, and then rate hikes, and then the market pullback, and then the market over the past couple of years really trying to find its footing.
Drew, thanks so much again for coming on to the podcast and helping us break down some of the key findings from the inaugural U.S. Art Market Report produced by Bank of America and ArtTactic. If our listeners haven't already, they should definitely download it and read the report, which they can do for free. We appreciate the time and always great chatting.
Yeah, thanks, Adam. I appreciate it, and look forward to seeing you soon at one of the fairs.